Check the markets as we always do. Carl said it. We're off the lows. Maybe on those Waller comments. It was an ugly picture earlier. It's still kind of ugly, obviously. Dow's down 1%. That's a loss of 304. S&P is off by 32. NASDAQ down 0.2%, down 71. 10-year note yield. The 10-year yield is below 3%. It's at 2.97. So you got a bunch of price target cuts today. The euro drops below par to the dollar. Oil barely above 90, below its 200-day moving average. 10 years at 297, 298, as we said. But then there's the biggie, and that's Savita over at Bank of America, cutting the price target 3,600 from 45, looking for an overall 25% decline. Cuts earnings forecast, now looks for a mild recession starting in the second half of this year. Josh, too negative or not?
Well, I mean, she basically is now mirroring reality because she cut to about 3% higher than where we are, or 3% lower her new target than where we are now. So this is really just playing catch up to what the market has thrown at us this year. All of the things that we were worried about in March are worse in June and July, and I don't think she'll be the last of the strategists to normalize. We'll call it normalize. Like it's unlikely that the most ebullient forecasts are going to come true unless something major changes. But as we get further and further into the year and the trends that have been hurting the market continue, it's like harder to keep those price targets up. So the technicians got here first. Like, no offense to anybody, the technicians beat the strategists. If you recall watching the show, some of my comments, technically, the NASDAQ 100 broke below the uptrend and finished the uptrend effectively at the end of February. And then at the end of April, the S&P 500 followed suit. And so you got there way quicker just purely on looking at buying and selling than you did with the commentary. Right. Now the commentary is catching up.
Well, I mean, it's not just Savita either who's negative. I mean, Leisman does his All-America Economic Survey, most bearish ever for stocks. Just 27% of the public believe now is a good time to invest in stocks. That's the lowest percentage in the history of the survey.
Well, the public doesn't know. They don't know anything. The public is like a mood ring. So when they've just seen their 401k fall 20%, that's when they get the most bearish.
There's no difference.
Don't go by that.
Yeah, well, you could say the same thing about a Savita, capitulating now.
No,
that's kind of
she's a quant. No.
Doesn't matter.
I can't say the same thing, and I'll tell you why. The people answering Leisman's survey are answering out of emotion. What Bank of America is doing is they're taking inputs from 5 different categories of data, and they're trying to come up with a forecast that's based on something quantitative. I'm not suggesting they're any better at it than anyone else. I'm just making the point. Savita doesn't feel one way or the other about this emotionally. Okay? So there is a really big difference. And I think the public being as negative as it is this early in the game, before we've even seen material earnings numbers come down, before we have the official R word being talked about by the NBER.
Public's not as dumb as you
That's
think.
really interesting to me.
Yeah, well, the public's not as dumb as you
I don't
suggest.
think they're dumb at all.
Well, you said they don't know anything.
They arrive at that place. Well, they don't. But they arrive at that place. Based on how they feel, and how they feel is dictated by whatever the market did in the last week. That's how sentiment works. It's okay. I feel the same way. There's nothing wrong with that. But I'm just making the point. Now you're starting to see quants, and you're starting to see economists and chief strategists just come to reality with what stock prices and bond prices have been screaming at them for the last 90 days, 180 days.
I'm going to pick out a gem in what Josh just said. It's how consumers feel. They feel lousy. I can't use the actual word for how they feel on air. And the reason is because of food and energy. I mean, that's really what this is. All right. And gasoline futures are down 30% in 1 month. And those have not yet fully shown up at the pump. They will. Wheat and corn futures are back to where they were at the beginning of the year. Those have not shown up in the grocery stores, but they will, and that will help consumer sentiment. Josh is very right on this, and he's very right that it's a contraindicator. Where anybody talking back to me would say something is, yeah, but these have been terrible sentiment surveys all year, and it hasn't turned the market around. That's absolutely true. I submit to you that it's gas and food prices coming down that's going to matter.